Welcome back to Curious Commerce, topic Fund Flow Statement, Part 8. Today we will discuss about the fund flow statement preparations as well as we deeply discuss about the practical examples related to the manufacturing sector and retail sector. We have already understood the concept of funds, changes of working capital through the scheduling of changes, and fund from operations. Now comes the most important part, that is the preparation of fund flow statement. Many learners feel this is difficult, but actually, if you know the format, it becomes very easy. In the session, I will explain the step and the standard format clearly. A fund flow statement is a statement showing the sources and applications of funds between two balance sheet dates. It answers two powerful questions. First one is, from where did funds come? The second one is, where were the funds used? In the case of the preparation, before preparing the final statement, we follow three steps. The first step is schedule of changes in working capital. We already discussed. Second one is the calculate fund from operations. We already discussed in our previous sessions. And the last step is prepare fund flow statement. Now we prepare final statement showing the sources of fund and applications of fund. This is the standard format. Now let us see the standard format used in the examinations or in the competitive examinations. Fund flow statement format has the two divisions. One is sources of fund and the applications of fund. The sources of fund includes fund from operations, issue of shares, issue of debentures, long-term loans raised, sale of fixed asset, decreasing in working capital. The application of fund side includes purchase of fixed asset, redemption of debentures, repayment of long-term loans, payment of dividend, payment of tax, increase in working capital. Suppose, just imagine, fund from operation is 1,50,000, issue of shares is 50,000, that total sources is 2 lakh. And the same way, the purchase of machinery is 1,20,000, increasing working capital is 80,000. The total applications of fund is 2 lakh. The statement is balanced, correct. Let's revise quickly. Step 1, scheduling of working capital. Step 2, calculate the fund from operations. Step 3, fund flow statement preparation. So learners, now you clearly know the preparation and format of fund flow statement. Understanding fund flow becomes very easy when we see a real business example. So now let us understand fund flow using a small retail shop example, something we see every day. Imagine a small retail grocery shop. At the beginning of the year, the shop owner has working capital of 80,000 rupees, some stock, some cash, and few creditors. During the year, many financial activities happen. Let us see how funds moves. Major transactions during the year. First one is funds generated from operations. The shop earns profit from daily sales. After adjustments, from operation is 60,000 rupees. This is the main sources of fund for most retail businesses. Good side, the fund from operations is 60,000 rupees. That is the good side. Business is self-sustained. Purchase of new display rack. The owner buys a new display rack for 30,000 rupees. What happened in that business? Or what happened in the case of the transactions or in the books of accounts? Fixed asset increases, right? But the funds go out. So this is an application of fund. The third step is the increase in inventory. Before festival season, the shop increases stock. Inventory rises by 20,000 rupees. Therefore, the current asset increases, working capital also increases. This is an application of fund. Because money is now locked in stock. The fourth stage is loan taken from bank to support expansion of the small retail business. The owner takes a bank loan of rupees 25,000. Therefore, the cash comes into business. The long-term liability increases. This is the sources of fund. Now let us summarize the sources of fund. The fund from operations is 60,000 rupees. The bank loan is 25,000 rupees. The total sources is 85,000 rupees. Related to the application of fund, the display rack purchased around 30,000 rupees, increase in inventory 20,000 rupees, and remaining increase in working capital, that is balancing figure. This is how fund flow explains the financial movement inside the retail business. Healthy retail shop usually shows strong fund from operations, controlled inventory, and limited dependence on loan. This indicates good financial management. Now let us understand fund flow in a manufacturing company where financial movements are usually bigger and more complex. This example will help you connect theory with real industry practice. Let's begin manufacturing business scenario. Imagine a small manufacturing company that produces furniture. At the beginning of the year, the company has working capital of 2 lakh rupees, machinery already installed, raw materials are in stock, some creditors. During the year, several major transactions takes place. Let us see how funds move. Major transactions during the year. The first one is fund from operation. The company earns profit from manufacturing and selling furniture. After adjustments, fund from operations is 1,20,000. This is the primary internal source of funds. For manufacturing firms, strong operating funds indicate efficient production and sales. The second one is the purchase of new machinery. To increase production capacity, the company purchases new machinery for 1,50,000 rupees. What happened when the new machinery purchased? Fixed assets increases and funds go out. So this is an application of fund. In manufacturing, machinery purchases are very common applications. The third one is issue of shares. To finance expansion, the company issues shares worth around 80,000 rupees. It leads to cash comes into business, share capital increases. This is the sources of fund. This reduces dependence on loan. The fourth thing is the increase in raw material inventory. Due to the higher production planning, raw material stock increased by 30,000 rupees, leads to current asset increase and working capital also increase. This is an application of funds because money is blocked in inventory. The final fund flow summary is sources of fund as follows. Fund from operation 1,20,000, issue of shares 80,000, total sources of fund is 2 lakh. The applications of fund, purchase of machinery 1,50,000, increase in working capital that is 50,000 rupees, total application of fund is 2 lakh. The statement is balanced, it is correct. In manufacturing company, watch carefully heavy machinery investment, large inventory levels, and longer operating cycle. Efficient fund management is very critical for their success. End of the session. We already discussed about the preparation of fund flow statement, and in this session we already discussed about the practical examples of fund flow statement related to the retail business and manufacturing industry. Please like, subscribe, and share to Curious Commerce. For daily updates, join WhatsApp channel Curious Commerce Financial Management Hub. Thank you.